So fucking. Hello, everybody. Apologies for the slight late start today. A few technical issues. Just making sure everything's working. Is that working? Is that working? If you can just confirm you can hear me, that'd be great. And then we'll make a start on today's market stuff. I think there is a slight delay on this, so if someone can just type in the chat if it is all coming through, that would be great. Yes, but a bit buffering, someone's saying. Okay, hopefully that'll clear itself up. Let's get going. Weekly recap and market outlook for next week. So we do this every week, and what I do, a quick look at what's been going on in markets over the last week. A look ahead to next week, the major announcements, all the usual stuff. Then we jump back onto the platform and take a look at indices, currencies, metals, commodities. Then I'll jump into the questions and answer any questions that you've got, any markets you want looking at. Let's just do the risk warning first of all. This presentation is only for educational purposes, does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones and Capital.com accept no responsibility for any use that may be made of these comments and for any consequences that result. Spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 78.79% of retail investor accounts lose money when spread betting and or trading CFDs with this provider. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. Okay. Let's have a look at next week. Strange week next week. Obviously, here in the UK, it's a strange week because it's Thursday, Friday next week is bank holiday. So there'll be no live stream next Friday because we'll all be celebrating the Queen's Jubilee. So that's not happening. This won't be happening this time next week. So a bit of an odd week. But looking ahead to next week, on Tuesday, we've got China non-manufacturing PMI. So inflation. Inflation clearly still being closely watched. Wednesday, I think, will be interesting. EU retail sales. How well or not is that part of the EU economy doing? And then next Friday, non-farm payrolls. So the US unemployment numbers. Normally a pretty big announcement. Perhaps not as important at the moment as interest rates and inflation and all of that. But next Friday will be a big one with those payrolls. So reasonable volatility expected. To find out more about the company, go to Capital.com. Any questions, drop me an email, david.jones@capital.com. On Twitter, I'm at Jones the Markets. I don't tweet that much. I should pull my finger out. And jonesthemarkets.com to find out more about my trading approach. Follow Capital.com on YouTube, Twitter, and Facebook. Right, let's get into it. What should we start off with? Should we start off with gold? I did a trade actually. We did a video yesterday on gold, and I did a trade for myself yesterday on gold as well. And I've come out of it actually on this spiky move. I think this inflation. We had an inflation number out, didn't we, in the last hour or so? That was a bit better than expected. So we saw a bit of a spike in gold. So the video yesterday we did on gold, I was trying to buy it. And I don't think that order's been hit yet. There's the order. So I put an order in to buy at 18.35 and the price hasn't traded down there yet. Maybe it will, maybe it won't. But in the video yesterday, I was speculating that perhaps this correction, or whatever we want to call it, downtrend that's been in place since mid-April, perhaps that's over. And perhaps we'd see gold start to recover a bit from here. We've had a bit of a recovery since yesterday, but nothing major. So for me, I would be a buyer of gold at the moment. I'm not expecting a crazy move up to like 2,100 or anything like that. I think that perhaps gold from here will be just quite a choppy market, a bit like oil has been in the last 2 or 3 months or so, after the initial surge, just ranging. And I think that might be the case for gold. But I thought it was interesting that the weakness so far in mid-May stopped pretty much ahead of the January lows. So for me, 1780, big level for gold. So for me, I'm quite happy to be a buyer of gold with a stop the other side of that level. So I wonder, let's see what happens next week. Will we see the price of gold stage more of a recovery? So I'm not, like I say, I'm not expecting any crazy moves, but I wonder if we've sold off enough. Silver, I hate silver. Can never get this market right at the moment. Well, actually, over the last year or so for silver, I find it a really frustrating market. It's not one I've traded much myself, for me personally, at all. We do trades on silver in this account, because this is the one we use for the videos. Currently running at a loss on silver, £164 down after being short. I think that's the only losing trade. The only losing open position at the moment is silver. I find it a really scrappy market to trade. I did wonder when it sold off through these old lows at 21.50, were we going to see a deeper sell-off? We did have a bit of a dip down to $20.40, but it's bounced back since then. Where's it going to go? Oh, who knows? I don't know with silver. I hate it. But so far, at least, the recovery is still going on. So the recovery off those May lows is still going. So I'm short at the moment. I've got a stop on the short. If it pushes much higher, I'd be stopped out. So for me, from an hourly chart point of view, I'd be a buyer on dips on silver. We've seen good support come out at about 21.50 for silver. So let's see what happens. But I would be tempted if it pushed up to 23 to be a seller for silver. But for me, it's such a scrappy market from a trend point of view that trends start, then they just falls out of the trend really quickly, then it goes down, then it reverses. I find it, for my style of trading, it hasn't worked well over the last year. So it's not one I've traded a lot myself. I think for now that trend in silver is still up. Let's see what happens. Let's move to what I think are more interesting markets. Let's have a look at the S&P. I'm a big fan of the S&P 500. I think we've seen a lot of volatility in the S&P this week, as ever. So on the one hand, you can see we've had a really good run over the last few days. We've got a bunch of blue candles here. So the market has been closing higher on a daily basis over the last 6 days or so. That is bullish. But we know that sentiment at the moment in stock markets can disappear really quickly and the market can turn around. So again, I think it makes for an interesting week next week for the S&P. And I think there are arguments to either be short or long from here. And let me explain my thinking behind that. First of all, it's only the 20th of May. So it was only a week ago that the S&P hit its worst levels since March 2021. So we were at, 14-month low on the S&P a week ago. And we've seen a really impressive bounce back. The market's bounced back nearly 10% in the last week. We've seen a 300-point move off that low. So it's a strong bounce back by the market, 8% wherever it is off that low. And it's running back. At the moment, it's breaking above the highs from the middle of May, which is bullish. What I would be tempted to do, though, I must admit, I probably wouldn't do a trade on it today, but I think it's an interesting market next week. If it starts to run out of steam Monday or Tuesday, I'd be thinking about going short again. So I think it's an impressive bounce back here. I would still argue that despite the bounce back, this trend, it's maybe not the best drawn trend line in the world, this trend line is still valid. So for me, if it pushed a bit higher next week, let's say we push into 4,200, 4,300, this has been a real problem for the S&P since the end of April. So I would absolutely think the momentum at the moment on the S&P is still positive. But let's just watch what happens next week, because we know it can sort of turn very quickly, sentiment in stock markets at the moment, and I would still be wary that this market is gonna run out of steam. But if we look on the hourly charts, you can't deny the strength at the moment. So I think it could be an interesting day today for the S&P, up at this old 4100 level. It's had a bit of a lift because of the inflation stuff. But I'm still a bit wary that this market could run out of steam next week. So let's see what happens there. Nasdaq, same story with the Nasdaq really. Nasdaq 100, same stuff. So it was a week ago, the Nasdaq was down at 11,480, which was its worst level since November 2020. So what's that? 18-month low on the Nasdaq last week. Yes, the market has bounced back strongly. It's not bounced back as strongly as the S&P though. So for me, actually, I could be tempted to go short the Nasdaq here. Maybe that's the trade. That's a trade. I think this is interesting actually. For me, it's interesting anyway. We've got this market. I mean, this area, sort of 12.6, has been something of a ceiling for the Nasdaq through a lot of May, and here we are trading at 12,480. So I wonder if there's a trade there. If the trade now is to go against this blip higher because of inflation. Let's do the trade. So 12.6 is the level. We'll go 12.7 for a stop. We'll give it a bit of room because the market is clearly, it's a volatile market. We know that. So I'm going to go 12.7 for a stop. We normally risk about 100 quid on these trades. So on the live stream trades, sorry. Let's do that. Okay, 6. Okay, sell it. There we go. So go short the Nasdaq up here, just to see if this old resistance stays in place. So yeah, stock market's strong over the last few days, but I would worry about them being a bit vulnerable next week. Someone said US has got Memorial Day holiday on Monday. Thanks for that. I didn't know that. I'm not very good at these holidays, I must admit. Right, what else are we going to look at? Let's take a look at the FTSE 100. So the UK market, again, very different makeup to the S&P and the Nasdaq, obviously. So it has performed differently this year. So the FTSE is up for the year. So it ended the year last year at 7,400, and here we are at 7,580. So again, I think if we saw US stock market start to turn down next week, we could see this whole 76 to 77 area for the FTSE start to be a problem once again. So it will be interesting. There's a lot to watch next week, I think, for stock markets running back in to these old problem areas. And then finally the Nikkei. Have we still got a short on the Nikkei? Yeah, Japan 225. So we're still short that one. Here we go. And it's been a bit boring, that market, for the past 6 weeks or so. I would argue the trend is still down on that one, off the September highs. So yeah, still in a downtrend, a little bit boring, and that's it, I think, for that. Okay, so we did gold and silver. We've done some of the indices. I did a trade on the pound against the dollar this week that worked well, actually. It was against the big trend, so it was completely against what I always say every week. But I was looking on the hourly charts. Where did and I think the market, I bought it here. No, I bought it here, sorry. I bought it here. What am I talking about? So the market had been trending up for about a week. And even though the big trend was down, on the hourlies, the short-term trend was up. So I was looking on the hourlies for a bit of a trade and ended up buying it. I must have been here, actually, on the retest and did okay. And I came out of it yesterday or early this morning. So the trend, it's quite interesting at the moment that we do have these conflicting trends in lots of markets. The 2-week trend for the pound is up, but the big trend is clearly down for the last 12 months. The big trend since June is down. So for me, even if the thing rallies 600 points from here, the trend is still down. So I think if we've got a bit of a boost over the next month for the pound, it still looks like a good selling opportunity. So it's a long way away from that downtrend line. So I'd always be concerned about the thing running out of steam, any rallies running out of steam. In the short term, it's having a good run. But again, there is an argument to be a seller up here for pound against the dollar. You know, we saw, I mean, let's see what happens. We saw this level, 126.50 or thereabouts, be a problem. You know, we're up there now, but it is still strong. But again, I think that's perhaps another one to watch next week for a reversal. We'll take a look at the dollar in a second, but that's another one to keep an eye on for a potential reversal next week. The other market is Euro US dollar. I did a video on the main channel this week, Euro dollar. I was in profit. It's 50p. It's losing 50p at the moment. But I did a trade this week on Euro US dollar. And again, it's had a good run on the hourlies. On the hourlies, it'd still be a buyer of dips on the hourlies. You know, there have been, you know, some reasonable dips over the last couple of days. So again, like the pound, the euro against the dollar is strong in the short to medium term, but the big trend, and you can see it here, is most definitely down for euro against the dollar. So again, for me, I am treating this rally in the big picture, you know, the same way I just looked at that rally or that rally or that rally. It's just the market retracing some of that trend, and the expectation is it's going to run out of steam. So I think it can be quite confusing when it's like this, because you've got one trend, very clear trend over the last year for the euro. But if you're looking at an hourly chart, you've also got a great trend over the last couple of weeks going the other way for the euro. So you need to decide, well, what time frame am I trying to trade here, and trade it accordingly. You know, so if you want to wait and see if the market moves higher, so you can get short off the daily chart, perfectly valid approach. Or if you think actually maybe there's a bit more left to squeeze higher the next couple of days, that's it. We'll do it then. You know, we'll trade it on the hourly chart. So it's interesting. So again, I think it's going to be interesting markets to watch next week. Do we see what is dollar weakness is what we're looking at, isn't it? Do we see dollar weakness continue? So let's have a look at the US dollar. So as I often say, absolutely love the US dollar index as a market to trade. A great trending market over the years. You know, I've said, you know, I've traded it a lot on the way up over the last 12 months. You know, it has been feeling a bit overcooked in the last month, but that trend has still been up. You know, it's given, this is quite a big retracement we're going through at the moment from a US dollar point of view. So for me, I am waiting to be a buyer of the dollar index. So for me, when it stops going down, I'm going to be a buyer again. And this, of course, is where we'll see those euro and pound charts with sort of swap direction as well. But for me at the moment, the US dollar is still weak. Okay, this is the dollar index. It's still weak. It's at its lowest for a month. Okay, so it's quite a deep pullback. If you're a fan of the RSI could well head into oversold next week, which would only be the second time this year it got oversold. So the RSI signals have done okay. So let's see what happens. So for me, I am expecting a dollar comeback, and I just want it to stop going down before I think about buying it. But I think there's a lot of interesting stuff going on with these currency markets at the moment. So well worth keeping an eye on. Right, what are we looking at next? Energies. We'll look at oil. I say oil's had a bit of. I mean, it's still a boring market. I think oil, after the excitement we had, obviously into March because of the Russian invasion of Ukraine, I would be going short oil now. Actually, that's going to be the trade we'll do. We'll do another trade because the market since March has just flip flop around this 105 area, you know, and I just can't. Well, famous last words. I can't see the case for oil at the moment bursting through those post Ukraine invasion highs at 126. So for me, I think it's a short up here. Is obviously the answer. If I don't think it's going up, what are we going to do? Well, we're going to have to think about going short, aren't we? So for me, got a good place for a stop up above the March highs, about 116. The market's 113 at the moment. And if it plops back down into its recent range, there's perhaps $15 downside back for a little trip below $100. Let's see what happens. So what did I say the level was? 116. Let's say we'll do 117 for a stop, which is a wide stop, but you know, we're looking for a big move here. So I only want to risk £100 again. So we'll do 32 barrels. So we're going to sell 32 barrels of oil at 113. And I'm selling because it's at the top of the recent range. And I just wonder if we're going to see the price start to turn down again, like it has done over the last 2.5 months or so. And I put a stop at 117. Okay, let's sell oil. So nothing much has changed over the last, couple of months for oil. We're just flopping around. And I wonder, is this what gold will look like over the next few months? Let's see what happens. Now, natural gas is still a crazy market. Natural gas. Look at the range in May. So the market traded as high as 9, first of all, 6th of May, drops to 6.5, and then in the last couple of days goes up to 9.42, which is the highest levels since 2008. I don't know if we've got the data. Oh, we do have the data. There we go. Could go all the way back here on natural gas, 2008 highs. So it's a 13.5-year high for natural gas. But the market has swung through. It's about 35% this month. That's a massive range for what is a pretty well traded commodity. It's a big old range. And if gold moved 30% in a month, that's a $600 swing in the price of gold. That would be a big move. So natural gas trading like a nutcase as usual. And I think it's a tricky market to trade now. I think I've done some good trades over the last year on natural gas off these various trends. But when it's volatile like this, I think it's really hard. I think the temptation is always to try and call the top. I think, plenty of people, and I know this because I've spoken to some of them, have had their fingers burnt on the way up trying to pick the top for natural gas. And trading without stop losses and all of that crazy stuff, which is just stupid. I suppose if you really wanted to pick the top now, for me, I'd be a seller at 8.29 with a stop above 9.50. Because if it bursts high again, I'm going to come out. But I think I'd much rather be a buyer of dips of natural gas. And you can see, it's a long way away from where the price is now, but you can see how 6.5 has been a big level for natural gas in late April and early May. So I think if it continues its sell-off from here into next week, it'd be interesting to see what happens. There's a lot of divergence, bearish divergence, for those of you who are fans of that, on the RSI. So the market hits a high, trades a bit higher still, trades higher again. The RSI is making lower highs. So that can be a suggestion the strength is running out of steam. Let's see what happens. For me, it's a tricky market when it's as volatile as that. And then let's take a look at the cryptocurrencies. Is Bitcoin still a thing? Is it still going, Bitcoin? It's down at 29,200 and something, and 84. Pretty much the same as a couple of weeks ago. We've not seen much movement in the last couple of weeks. If I had to do a trade on Bitcoin, I'd be a buyer down here. And I would put my stop loss the other side of that 12th of May low, which is 25,600. But it's really run out of momentum, hasn't it? And I think if it breaks below 25, we'll just see more selling and start targeting perhaps 20 next. So imagine if Bitcoin went all the way back to, 5,000, where it was a couple of years ago. Never say never. But for me, it's still pretty weak. It's been a fairly boring couple of weeks. Let's see if that old level holds at 25,500 on Bitcoin. But again, not my favourite market in the world. Same for Ethereum. Again, Ethereum for some reason lurched lower yesterday. It's interesting that low. Let's zoom it in. That low from the 12th of May at 1,720 has sort of held. I think it traded 1,710 yesterday. So again, if you wanted to be an aggressive bottom picker, This is a big level going back to June of 2021. It's a 12-month low almost on Ethereum. So an aggressive trade for me would be a buyer with a stop the other side of 1,650. So yeah. What's your favourite market? Someone's asked. The cryptos, they're doing nothing. No, I hate cryptocurrencies. I think I've said it a few times. I just think, I've said the reasons why. I think it just sucks in people who don't know what they're doing, who are even worse at trading than most other people are in other markets. I think crypto, the whole concept of crypto is one thing, and I don't really care about that. The whole blockchain thing, fair enough. If that's how we all end up transacting in the future, great. But as a market to trade, I think it teaches people such bad habits. So I do maybe 2 trades a year in a cryptocurrency, maybe, but I'm absolutely not a fan. I'm much more a fan of the more traditional markets, of course, being very old. So so for me, S&P is probably the market I watch every day. And I think if all you did was focus on one market like the S&P 500, I think if you were looking at an hourly chart, there's at least 2 to 3 good trades, not necessarily profitable trades, but 2 to 3 good trades every week in a market like that. So yeah. Right, so we did that, we did Ethereum. So what's interesting? Well, what's interesting, I think, stock markets, okay, for next week, because we've had this run in stock markets, and still going now. This S&P is still going, and I think it's going to be interesting. Does it all start to run out of steam next week, or are we on the cusp of a reversal in stock markets, and actually the things are going to start going up again? Let's see what happens next week. I would still be leaning towards it running out of steam next week, because that's what we've seen all this year. Let's see what happens with that. And the currencies, we looked at like pound against the dollar and euro against the dollar. Big trends over the last 12 months down, but good trends over the last couple of weeks up. So again, are we going to see these intermediate trends start to run out of steam next week? So I think for me, those are the interesting markets to watch next week. Let's see how it works out. So what I'm going to do now, just a quick reminder of the contact details. Then I'll jump into the questions. So to find out more, go to Capital.com. Drop me an email with any questions. David.jones@Capital.com. @JonesTheMarkets is Twitter, and JonesTheMarkets.com is to find out more of my trading approach and the trading course I run. And of course, follow Capital.com on YouTube, Twitter, and Facebook. Right, let's get into some of the questions. Natural gas, we looked at that. Gold, we looked at that. We looked at gold, yes. Hi David, what do you think about price action patterns? Should one consider them while trading? Good question. Now, I suppose I definitely am a price action trader. Absolutely. So I look at trends and support and resistance. And it's not really a pattern, I suppose, but like the trade I did on the pound, the trend is up, the market's pulled back, there's big support. So that is a setup for me. I don't look at patterns like double tops and double bottoms and head and shoulders and triangles and all of that stuff. So I don't care about that stuff. And again, I'm sure there are people who make money trading that way. Good luck to them. So for me, I am very much price action driven, but looking at levels in the market, looking at previous highs and previous lows, and that's something that works for me. Again, it doesn't work all the time, but to go slightly off topic here, most people lose money when trading. I'm sure I say that every week. Most people lose money, and they lose money because when it comes to trading, they're idiots. They're probably not idiots in their everyday life, but they come to trading and they are idiots. And one of the big mistakes people make is they let their losses get too big and they snatch at their profits very quickly. So for me, I want to have an approach where if I get stopped out, I only lose a little bit. And if I'm right, hopefully I catch a decent swing. So for me, trading with the trend and looking at previous support and resistance levels for stop losses is an approach that works for me. Let's say, I know what the stats are. 58% of my short-term trades, not daily trades, 58% of my short-term trades make money. But when I'm right, for example, when I'm wrong, I lose 100 quid, but when I'm right, I make 140 quid. Okay, does that make sense? So if you want to put yourself in a position where your profits are bigger than your losses. Most people, when trading, their losses are almost double their average profit. You are never going to have a successful trading strategy. It's highly unlikely trading that way, because you're just a fugitive from the law of averages. Do you think DAX is keeping the rally even with higher liquefied natural gas prices? I've got absolutely no idea. We didn't look at the DAX, did we? Let's have a look at it. I did a trade on the DAX this week, so I got stopped out. And then the market went the way I thought it was going to go. It's just the way it goes. It's quite interesting, this DAX, isn't it? Because we've got again all these indices. They're really having quite the run. For me, I would view the DAX the same way as I view the S&P and the Nasdaq. Really strong at the moment, and the DAX has been since the 10th of May. But I'd be getting ready for the downturn. Let's see what happens. We've got some real problem areas coming up on the DAX. So, like here, 14.9 was an issue. Where is it now? 14.4 and 14.6. So I think this is another one. This is another one to add to the interesting markets to watch next week list. So again, definitely strong at the moment. I'd be happy to buy a dip today. Is it going to start running out of steam next week? Let's see what happens. Got some interesting levels to watch there. Okay. Let's see. How long will this rally last? That's the question, isn't it? Don't know. How do you measure momentum? I really don't know, to be honest. I mean, I don't measure momentum. I'm very much a trend-driven trader and investor, to be honest. So like the dollar index for me, if we'd gone back in time to here, whenever that was, November last year, the trend was up. So I want to be a buyer. For me, it's staying the right side of the trend. And even now, even when it's let's catch up with where it is. When it's sold off now, the big trend is still up. So the momentum, the short-term momentum is down. I'm not too bothered about measuring it, but the big trend is up. So I don't measure momentum. Can we have a look at ARK? Is it a good moment for bottom fishing? I was just reading a story before I started today about Cathie Wood, actually. Is it a good moment for bottom fishing? I would say no. And then, of course, at some point, I'm going to be wrong. But for me, this is ARK Innovation. If you don't know ARK, it's an interesting story. They are the absolute darling of US investors on the way up. So from the March 2020 lows, it was about $33, traded up to $160 in Feb 2021. High-profile investor in the likes of Tesla and other high-tech growth stocks. I think this article I was reading, she famously put a target of 500,000 on Bitcoin last year, Cathie Wood, who runs the fund. But, massively fallen out of favour as, of course, all these bets on the high-tech growth companies have failed or have done much worse over the last 12 months, I should say. So for me, the trend in ARK is still down. I would change my mind if it got above $55. But for me, we've had rallies along the way. They haven't lasted long. So I'd be wary of it running out of steam, personally. Let's see what else. Yeah, we did GBP. We did that. What about a short on Dell? Let's have a look at Dell. Bear market bounce. Let's have a look at them. Dell Technologies. Oh, did they do a share split there or something? Because I can't believe they halved in a day. Let me just check this somewhere else. Just want to check. Yeah, I think your short's an interesting one. I'm guessing they've had earnings out to have moved like that. I mean, they were 44 yesterday, and they opened at 50 today, didn't they? So I think that is an interesting trading short, that one. Yeah, I think they did a share split because I've got their chart there. That's what their chart actually looks like. Well, it's a massive. You can see the size of that move up, can't you? Yeah, I think an aggressive short for me. Because we're going to take the view, well, look, this move up has been overdone and the trend was down before that. Sell short now at 48.99, and I would put a stop above the high for the day. So the high for the day is $52.50. Let's do that. We're just going to go trading crazy today. I think that's an interesting short. So the high was 52.50. Let's go 52.75 for a stop. And we only want to risk losing £100 as usual. So how many shares do we do? 33. Yeah. So we'll sell. Bang. Yeah. It's quite an interesting short-term trade that, taking the view the market has overreacted, and I'm guessing it's because they have had earnings out or something. There's been some news out about Dell. But that trend is definitely still down, the bigger picture trend on Dell. Disney, we've got a trade on Disney. It's I think it's one of the most profitable trades at the moment. Let me see. Disney, there we go. We've been short Disney. We must have done it in a live stream, 11th of Feb, 20 past 3 in the afternoon. Went short at 153, and they're currently 107, that trade. So it's been running for about 3 months now, but it's racked up 2.5 times the risk, which goes back to what I was saying about trying to make sure your profits are bigger than your losses. So let's have a look at Disney. I mean, the trend is still down, isn't it, on Disney? So for me, the trend is still down. It's come a long way away from that downtrend. We would have done the trade in the live stream up here somewhere, I'm sure. So it's definitely got scope. If we saw further strength in broader markets next week, it's got scope to claw back, some of that. Personally, I wouldn't be a buyer because the trend is down still. The big trend is down. So we might get a bit of an oversold bounce from here. But again, I'd just be a bit wary that perhaps it runs out of steam again. Nvidia. I think Nvidia had earnings, didn't they? Was it yesterday? I can't remember. But I'm sure they've had earnings this week. It's interesting. It's a difficult. This is a difficult one for me. So I would argue. So the trend has been up since March 2020. So we've been, again, with 2 years and a bit off the coronavirus lows. It's fallen out of the downtrend. I would have given it a chance, but it's fallen again. So I'd be tempted to be a seller of Nvidia. Seller at where it is now at 185 with a stop the other side of $200. But it's when it's always close and it's just the start of maybe a break of a trend line. I think it's a difficult one to call, but I think perhaps we'll see it under a bit more pressure from there. Hang on a second. What's the Novavax? On the 7th of June, they have the FDA approval for a COVID vaccine. It might rally. Now, it might rally, but it might also not rally as well, because the fact it's the 7th of June, everyone else knows it's the 7th of June. So it's not, I would suggest, it's not as if the market is going to sit around waiting for the 7th of June. Unless there's a lot of, let's say they weren't expected to get approval, and they did, that would be a surprise. It'd be interesting to see what people think about Novavax. Let's have a quick Google, actually. I'm going to go Novavax vaccine. See what everyone thinks. The FDA's decision could come in weeks. Okay, let's see if we can get... it's been authorised or approved in several other countries, including the UK and Singapore. Waiting for US regulators to decide. Could serve as an alternative option. Okay, blah, 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 blah. Okay. For me... I don't like the chart, to be honest, but I think if you I wouldn't trade it because it looks like a not very nice chart. We've gone from 320 to $50, so it's lost, what's that, 85% in Feb of last year. But if you wanted to take a punt on the market perhaps going a bit crazy, if this vaccine gets approved, if it's been approved in the UK, then I would be leaning to thinking, well, it's probably going to get approved in the US, isn't it? Who knows? I'm not a vaccine expert. But I think the trade would be to be a buyer now, and you'd need to have a wide stop. I'd have a stop underneath the lows, underneath the 10th of May lows, which is $38. So it's a big stop. It's 20% stop. I wonder if it would be a bit of a damp squib, but I'm gonna see now. I'm gonna have to watch it next week and see what happens. But for me, I'd argue that the trend, if we just go back to February of this year, I'd argue the trend for Novavax is most definitely still down. So, it wouldn't be one that would appeal to me. But it'd be interesting to see how it reacts as and whenever that news comes out. Let's see what happens. So, 1 NIO. NIO is the electric car company, isn't it? Chinese electric car company. It's a bit of a dog, NIO, isn't it? I did trade this last year, actually, when it was, was it maybe even, God, maybe it was before that then. Maybe it was in 2020. Time is passing too quickly. See, I would say the trend is down on NIO. So for me, you know, if you were going to be a bit pedantic about it, you'd pick up the trend from up here, which is a long way away from where the market is now. Or you pick up the trend from here, which is what I'd be tempted to do. So I would say the trend on NIO is still down. And it was only the 12th of May, so it was only 2 weeks ago, it traded to its lowest for this down move. Yeah, so it traded back to levels not seen since July 2020. So for me, not much interest in being a buyer of NIO while that trend is still down for me. So let's see. Let's see what happens. Of course, you might have a different opinion, which is what makes a market. NIO, we did NIO. SWN stock. I've got no idea what that is. Southwestern Energy. Does that sound about right? Oh, this looks good actually. It's interesting. You know, I'm sure you know this, but you know, some of these utility stocks, you know, have clearly bucked the market this year. I think we did a video maybe the week before last on dividend paying stocks, boring stocks, inverted commas, you know, in times of trouble. And it looks like Southwestern Energy, which I'm guessing is an energy company in the southwest of the US. You know, we're up here. We're up at $9, which is the highest. Oh God, it's really fallen from grace over the years. But this is the highest it's been since 2017. So it's at a 5-year high. So for me, it's always difficult when something is breaking out like this, because I think you've got a few choices. You can either do nothing, you can just buy into the break and assume the market's going to take off, or you wait for a pullback and you risk missing out on the move. So for me, I'd probably be more inclined to wait for a pullback. So for me, it's a buy. It's just where would you buy it? And me, I'd probably try and be a little bit patient and wait to see, do we get a bit of a pullback from here? But it's definitely an interesting stock, considering its performance over the years and considering the fact that just yesterday it hit a 5-year high. So yeah, that's an interesting spot, that one. So what else have we got? Aussie Yen. Oh, Euro. I've got a trade on Euro Yen at the moment, which I'm guessing maybe doesn't look that dissimilar. Aussie Yen. What's that look like? Man, it's a bit. I don't know. Again, it's a bit messy, isn't it? Well, I'd probably be a buyer. Well, because if you went back to 2020, the trend has been up, isn't it? The Australian dollar has been gaining against the Japanese yen, and of course that's been the trend this year as well. We've seen a reasonable decline. The only question is that, and it's a big question, is that decline over? Is that? So I've flipped it over to an hourly chart now. Is that? Oh, if I could draw it properly, bear with me. So I would say, okay, the trade I would do here, I would sell short. So I would take the view that these highs from the middle of May, around 91.20, have been a real problem for Aussie Yen. So go short now with a stop at 91.50. And if it gets stopped out, look at it with a fresh pair of eyes. But I would start to think that perhaps once again, we're going to see this whole area perhaps ends up being a problem for Aussie Yen. It's another interesting one to watch next week, I think, Aussie Yen, to see what happens. Longer term, absolutely, the big trends are up in Aussie Yen, but short term, is it going to struggle a bit with that level? Let's see. Let's see what happens. We looked at oil, we looked at pound against the dollar. We don't have that uranium ETF as far as I know. Let me have a quick look. No, we don't have it. So there's a Global X uranium ETF. What's that? Is that something similar? Maybe. I mean, you could take the view, if it's a similar market to that one you mentioned, you could take the view that the market has come down and retested the old low. So for me, on this one, Global X Uranium, I would be a buyer. The closest I would have my stop would be underneath the May low, looking to see, can the market get back up here to 28? Let's see. Let's see what happens. We looked at oil. Hi David, you use the term run out of steam. How do you determine the trend is running out of steam, or what makes you think that? That's a good question, and you're right, that is a subjective term, isn't it? It's just I think for me, it's when I look at levels in the market, like on the S&P 500, the trend has been down. Yeah, so for me, will it start to slow down again if we push up to here? So for me, that's what I mean, I think, when I talk about running out of steam, you know, and it is subjective, you're right. And it's just perhaps an expectation that we've had in this market, you know, a good run for 5 days. Is that good run going to stop soon? But no, good question that, and I can't really answer that one very well. Are you a fan of the trailing stop loss? Absolutely. All my trades, I will once it's got past a certain point, I'll start moving the stop loss up. So I always come out of a trade, well, always 95% of the time, come out of the trade because it's moved in my favor, first of all. Then I've started moving the stop loss up. We don't have it on our platform yet. It is coming. So at the moment, I've got to move stops manually if I'm doing trades on here. You know, I'll move the stops, the various stops around. But we will have automatic stop losses soon. Crude oil, we did crude oil. Can we check zinc? Zinc, Z-I. Is that zinc the thing or zinc the... Is it Toho zinc? Don't know what that is. If you want to put in what it is, we'll have a look properly, maybe. Dollar index, we looked at dollar index, we looked at Aussie Yen. Copper. I did a video on copper this week, and I left an order to buy, and I don't think it's been filled. No. So I was trying to buy at 390, sorry, and the market is 431. So I can't remember. Let's have a look at it. For me, I think, you know, it's really fallen out of a trend this year. It's a great trend, copper, since 2020. And then a much more gradual trend since August, the summer of last year. And then it's fallen out of the trend. And the video I did this week, I think it was on Monday this week, so in here somewhere probably. And I was saying I was going to be a buyer with a stop loss the other side of these lows, and thinking, okay, it's fallen out of its trend, but perhaps it's overshot on the downside. So I think it's an interesting market. It's clearly seen a loss of momentum over the last few months, but you know, all the way back to March 2021, $4 has been pretty much the floor for copper. So I just wondered, with it trading down to about 405 earlier in May, was this a low? Was this going to be an important low? So for me, I'd still be a buyer on a dip. Let's see what happens with copper. We looked at Nvidia. We looked at planning against the dollar. Do we offer real stocks? Yes, you do have. If you open an account with us and you access your account via the app, there is a stockbroking bit in there. We don't have it on the desktop platform yet, but you can buy physical stock with zero leverage. So via the app. We've looked at crude oil. How come everyone's asking for crude oil? I think we even did a trade on crude oil. Went short crude. So you can watch the recording, and I did do crude oil in the first 15-20 minutes. We don't cover zinc, unfortunately, Nicholas. So we can't have a look at zinc. Don't have that as a market. Right, I'm going to start wrapping things up there. So I think it's an interesting week next week, even though if you're in the UK, it's an odd week, of course, because of the double bank holiday at the end. So for me, markets to watch. Stock markets, still really strong today. Since we started doing this an hour ago. Are they going to start to run out of steam? That subjective phrase again next week. Is it going to run out of steam? So I think that's interesting. The dollar, the various pound against the dollar, euro against the dollar, again, big trends over the last 12 months, still down. Shorter term trends over the last couple of weeks, still up. So again, I would wonder, are we going to see sentiment start to turn in these markets and then start to sell off again? Let's see. So I think there is a lot to watch next week, particularly with stocks and the dollar. So we won't be doing the live stream on Friday because it's a holiday in the UK. We will be doing with our normal videos on the channel next week. So if you're not subscribed, if you click on subscribe, you'll get those. But we're going to wrap things. Oh, hang on. There's a quick question. If a stock falls 7 to 10% below what you paid for it, sell it. I have stop losses on stocks. They're normally not quite as tight from an investing point of view as 7%. But normally my stops on stocks are about 12 to 15%. And if they fall, then I do sell them. Okay, so that's it. We'll wrap things up there as usual. Contact details, Capital.com to open an account. David.jones@Capital.com to send me an email, any questions. @Jones and Markets on Twitter and jonesandmarkets.com to find out more about me and my trading approach. Follow us on YouTube, Twitter and Facebook. Have a good weekend, everybody, and see you in a couple of weeks. Good luck with your trading.